What changed in your Social Security payment as of May 1st is something officials were more than willing to let you uncover on your own. But Tim from Seniors Pathway is not going to let that slide. You didn't receive a simple explanation in the mail. No one paused your evening news broadcast to break it down. And your local Social Security Administration certainly didn't call you personally to explain what's happening. The same system you paid into with every paycheck throughout your entire working life is now expecting you to navigate complex updates buried in fine print and technical language. That is not acceptable, not for you, and not for the millions of Americans who built their retirement plans around the promise that this income would be there when they needed it most. So here's what we're doing today. We are going to walk through every major update affecting Social Security right now, explain what it means for your monthly income, and outline exactly what actions you need to take before another week passes. Because the difference between retirees who protect what they earned and those who quietly fall behind rarely comes down to luck, connections, or wealth. It comes down to one thing: understanding what's happening and acting on it in time. Here's what we'll cover. We're going to break down the cost of living adjustment now showing up in your May payment and why the actual increase in your bank account may be smaller than expected. We'll talk about a major law that removes two long-standing provisions that have been reducing benefits for public workers for decades, and why May is when those corrections begin. We'll go over how Medicare premiums reduce your check before you even see it, and a little-known appeal that could put hundreds of dollars back into your pocket each month. And we'll cover earnings limits, taxes, and the exact steps you need to take this week to make sure you're not missing out on money that belongs to you. Let's begin with the cost of living adjustment, because there's a real gap between the headline increase and what retirees are actually feeling day to day. The Social Security Administration announced a 2.5% COLA for 2025. On paper, that sounds like a raise. For the average retiree, it equals about $50 more per month. If both spouses receive benefits, that could mean over $2,200 more across the year. And yes, that increase is now reflected in your May payment. If you haven't checked your deposit recently, do it today. But here's where the reality shifts. That 2.5% figure is based on the Consumer Price Index, which measures price changes across a broad economy. The idea is simple. When prices rise, benefits rise too. That's the theory. Now ask yourself honestly, has your grocery bill only gone up 2.5%? What about your electricity, fuel, or prescriptions? Or your insurance costs compared to last year? For most people, the answer is no. And that's not just perception, it's math. The index includes spending habits of the entire population, including younger people who spend very differently from retirees. Retirees spend more on healthcare, housing, and essentials, the very areas that have increased the most. So while 2.5% may reflect general inflation, it doesn't reflect your reality. It doesn't match what it feels like to live on a fixed income while costs continue rising. This isn't meant to discourage you. It's meant to help you understand where your money is going. That $50 increase matters, but only if you're not losing it somewhere else without realizing it. And that leads us to something many people have never had clearly explained, something that's been quietly affecting Social Security payments for years. If you or your spouse ever worked in the public sector, this could be the most important part of this entire discussion. For decades, two rules reduced benefits for certain public employees. These were called the windfall elimination provision and the government pension offset. If you're unfamiliar with those names, consider yourself lucky, because for those affected, these rules meant losing hundreds of dollars every month. Here's how it worked. Imagine you spent years working as a teacher, firefighter, or public employee where Social Security taxes weren't withheld because you were part of a pension system. But at other points in your life, you worked jobs that did pay into Social Security. You earned credits, paid taxes, and expected to receive benefits from both systems. But the government applied a different formula that reduced your Social Security benefit simply because you also had a pension. Not because you did anything wrong, but because of how the rules were written. The government pension offset went even further. It could reduce or completely eliminate spousal or survivor benefits. That meant someone could lose access to benefits earned by their spouse, even after decades of work. Around 3.2 million Americans were affected. Teachers, police officers, public workers, people who spent their lives serving their communities. Now that has changed. The Social Security Fairness Act has eliminated both provisions entirely. Not reduced, completely removed. That means millions of people are now entitled to the full benefits they should have been receiving all along. And May is when many of those updated payments start arriving. Some people will see increases of $200, $400, or more each month. Others may receive retroactive payments, thousands of dollars owed for past underpayments. Here's the concern. There are people right now who qualify for these changes and don't even know it. They accepted their benefit amount without question because the system made it feel final. It's not final. If you or your spouse worked in a public job without paying Social Security taxes, or if your survivor benefits were reduced, you need to take action. The system is processing millions of cases, but those who follow up are the ones who get results first. Now let's move to another issue affecting nearly everyone: Medicare Part B premiums. These premiums are deducted directly from your Social Security payment before it reaches your account. You never see that money. It's gone automatically. In 2025, the standard Part B premium increased to $185 per month, up from $174.70. That's over $120 more per year being taken from your benefits. So when you got that $50 COLA increase, about $10 of it was already taken back by Medicare. Your real increase is closer to $40 per month, and that's just the standard premium. There's also something called IRMA, the Income-Related Monthly Adjustment Amount. If your income from 2 years ago exceeded certain limits, you could be paying significantly more, sometimes over $600 per month. And here's the part most people don't know. You can appeal it. If your income has dropped since then due to retirement, loss of income, or other changes, you can file Form SSA 44 to request a reduction. Many people have saved thousands per year simply by submitting that form. Next, if you're working while collecting benefits and haven't reached full retirement age, there's an earnings limit. For 2025, that limit is $22,320. If you go over it, your benefits are temporarily reduced. But that money isn't lost forever, it's credited back later. Still, the short-term impact can be significant if you're not prepared. Now let's talk taxes. Yes, your Social Security benefits can be taxed depending on your total income. If your combined income crosses certain thresholds, up to 85% of your benefits could become taxable. Those thresholds haven't changed in decades, which means more retirees are being affected every year. Now, here's what you should do immediately. Log into your My Social Security account. Review your earnings record carefully. Errors can reduce your benefit. If public sector rules may have affected you, contact the Social Security Administration directly. If you're paying higher Medicare premiums, consider filing an appeal. If you're working, track your earnings against the limit and understand your tax situation before filing season arrives. Here's the bottom line. None of this is overly complicated once explained clearly, but the system doesn't explain it clearly. It processes payments. It doesn't advocate for you. The retirees who benefit most are the ones who take control, ask questions, and follow up. You worked your entire life for this money. It was yours then. It's yours now. The rules changed this May. The people who act on those changes are the ones who benefit from them. If this helped you understand something new, share it with someone who needs it. It could make a real financial difference in their life. This is Seniors Pathway. See you in the next one.